Comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar.
Hello and welcome to Money on the Floor. I'm here to help you pick it up. Talking about arbitraging, talking about crazy cryptos, talking about trading in general. And we're still talking about this 0.145 ARB. But it's where we're at. Still waiting for Trade Pro, waiting for Nevercard. It's coming. Sign up's got to be this next week. I was checking out the ETH US dollar trade and I was noticing something that might help us all. Looks like it's coming back up. It's going to be a good buy trade. We can jump over here to Trade Pro, see if we can see it. Here we go. There's a day chart. Doesn't help us a lot except that we have indecision. So that's a good sign because it's going the wrong way. There's a 15-minute chart. We're in a wedge. Could be a big wedge. It's hard to tell. No matter what, you got a trend line across here. Right here, we got a morning star. So we've already turned around at that point. We're looking to break this point right here, which we've already broke. Kind of. So we're looking for it to go up and retest, come back, and then take off. Now we still got resistance here and resistance up here. Now it still may drop a little, but it looks like it's starting to go. So we will see. Now on here I can't put Fibonacci's, but I can bring down my MT4 and we can look at it there a little better. Here we go. Now what I want to show you is we already passed the 200 moving average, so we're in an uptrend. And if you look at structure, you got higher highs, higher lows. You know, from down here it goes like that all the way up and down, up and down, up and down to right here. Now here we broke structure. So right now we are not in an uptrend. We could be in a box. We could be turning into a downtrend. Nobody knows. But one thing I have figured out just by playing around with it, it's what you guys should do too, is if we check the Fibonacci's on these pull-ups, if you look down here, this is the 50%. Now, 50% is not a Fibonacci number. 50% is what we all like to call a half discount. It's a number that a lot of traders look at, and because we trade off of it, it becomes real. So therefore, it becomes a real number. Now, everybody likes a discount when they're trading. So if they're running up to here and they're running out of buyers, then they have to go down to give a discount, and then people start buying again. And that's what happened. Now you can see that that happened here. We're at the 50%. We went all the way up again. Now, let me remove this one. Okay, that one's gone. Now, the next up move, if you look, is over here. Oh, I got to close something. There we go. The next up move is going to be over here. We grab the Fibonacci's. We go from here all the way to the top. That's the next up move. And you'll notice we have the 50% right here. So it's already come down to the 50%. So everybody was buying, buying, buying. They made their money. They sold off. And now they're giving you a discount so you can make some more money. Now, this is called the river, all these lines when they come together. And usually we trade away from the river or to the river. And right now we're in it. So we want to trade away from it. Unless it's a complete trend change, then there's nothing you can do. It's going to drop right through the 20 moving average. But right now, you got the 200 moving average, excuse me. But right now, the 200 is still holding. And so is the 100. So to me, we're still in an uptrend. So we're going up. We're coming down to the 50% fib, just like we did over here. If you look to the past, you find out what's going to happen in the future, and that's what we just did. So we're going to looking to go all the way back up to the top and probably make a double top and either come back down or continue on our way on our journey. So it's hard to say, but it's definitely interesting. And I would definitely be looking to support right here. Does that even make a line? No. Come here. Okay, we got support right there. So we need to break through that. And we got a little bit of support right there. So we need to break through that one. Once we break through that one, we got to get through this one. The other one's at the top up here. But that shouldn't be that bad. The main thing is getting through these two. So right now we got to buy a candle, so we'll see what happens. So as long as it doesn't, it could go down to the 618 and still come up. But if we look to the past, it was the 50%. And that's where we're at. Now we didn't tag it, we're above it, but we did break through the other one, the 38. So most likely we're going up. If this goes up here and breaks above this candle, I would be buying. And you're going to put your stop as close as you can get to this bottom, because if you're wrong, you want to get out. Or you can put it under the 618, or I mean the 50%. But I would put it right underneath those candles, and if you're wrong, just get out. And then when it goes back in your favor, if you feel you still have a trade like this, then you get back in. It's not nothing wrong with being that. It's just it's called precaution. And if you don't do that, you create bad habits. Is the problem. And you don't move your stop, because that's the worst bad habit. So if we're going to make money, we got to have a tight stop, because we need to keep the losses small. That's the most important thing here. Need that small loss. I will always push that, because that was my biggest problem, is not having a small stop. Because I didn't have a good system at the time, I would put a small stop, and sure, I got stopped out all the time. You just can't jump into a trade anywhere you want. You need a reason. Maybe a candlestick pattern, maybe a bounce off a moving average or a fib, or something where you have all at one time. A 50% fib, a moving average bounce, a candlestick pattern telling you to buy. You need to have more confluence. Confluence is having many things in one area telling you it's something's going to happen. So it puts the odds in your favor. And when you have that, you will win. And if you don't, at least you had the odds in your favor. Sometimes you're going to lose, and that's okay. It's not you didn't do anything wrong. You're going to lose 25% of your trades, but 75% you got to let them run. So now if we keep our stop loss tight and we get stopped out tight, so the winner's got to run. And how do you do that? By letting it go, and you move your stop to break even. Now, we don't use one whole lot or whatever it is you want to trade with, whether it's 0.1, one lot, break it up into 3 sections and start out your first trade with that. And if you lose, you're only losing on 1/3 of your normal size and at a small stop loss. Now, if you go into profit, which we're hoping you do, but there's no guarantee, you move your stop to break even and add another position. Now, at that time, you still can have one losing trade because you have put on a second trade. Now, as you go into profit some more, you move your stop up and you add a third position. Now you have profit from the two, and it'll protect the other one. So you can have a win-win situation. And as you go into profit more, you keep moving your stop until you get a candlestick pattern or a reason to tell you that it's turning around. And then you get out. Or you just keep moving your stop till it knocks you out. But if you can catch it before it knocks you out, you will make more money. That is the key. And is the hardest part. And it's probably the hardest thing you will do, is to let it go until you know that it's time to get out. But that's it. It's simple. But look for this to be a buy trade. I believe ETH is going all the way back to the top. So it looked like a head and shoulder pattern right here. And if it was, you would sell the neckline, which is right through here. That would be right here. If it is, we would be going down. So if we break the 50% fib, most likely then it is a head and shoulders. But from what I see, cryptos don't use head and shoulders. So I don't know. I don't see it. I see a lot of double tops. I see a lot of triangles. I see a lot of Fibonacci's. They're very true to that. But look to the past. Find what works and then utilize that. Put that to your power. So it's very easy to do, and it makes it more fun because you've figured it out. Don't listen to other people. You want to figure it out. Now, if you're not sure, you can listen to other people and then go find out what it is they're seeing. Maybe you'll see the same thing, and then that's awesome. Nothing wrong with that. Even if you're shadow trading, you can go back in and check their trades. Maybe they could have got in sooner. Maybe they didn't. Maybe you spot something else different, or you learned by what they did. Why did they get in there? Why? Okay, that's what they did. They had a candle pattern. They had a bounce off a fib. There's so many things that you can learn from all that. It doesn't mean everybody trades different, so you're never going to trade the same as someone else. But even if you can see the trade, you can at least check out what happened. I can tell you all day long how I would trade, and we're all different, and everybody trades different. And there's so many different ways to trade. That's what makes it wonderful. All we want to do is make money, put the odds in your favor. Money management will do that. Fibonacci's will do that. Candlesticks will do that. Trend lines will do that. Support and resistance will do that. So anyway, hang in there. Hopefully this will help you. Learn from it and move on. And have a great evening. Stay ARB strong. We will talk to you tomorrow. Bye-bye.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.